Good morning, everyone, and thank you for joining us for this profit planning webinar. Our goal is to provide valuable insights and knowledge to increase your farm's profitability for years and generations to come. If you have any questions, feel free to drop them in the comments and we'll make sure to address them by the end of the discussion. And wherever you're watching from, please like, subscribe, and turn on notifications so you'll never miss an update when we go live. Without further ado, I'm thrilled to welcome back Ted Seifried, Chief Marketing Strategist for Zaner Ag Hedge. As many of you know, the USDA just released the Grain Stocks report yesterday. This is one of the most closely watched reports of the year as we head into planting season. We're excited to have Ted here to break down what the data means for your farm and share his insights on what to expect as we move into spring. With that, I'll turn it over to you, Ted. Good morning.
Good morning, on, buddy. And yeah, like you said, some wild times. Yesterday's reports, the quarterly grain stocks report as well, and the prospective plantings report are certainly a highly anticipated reports. But we also have a whole lot of other stuff going on right now too. And just in the way that the market digests information, one day can look a lot different than the other. And I guess what I'm talking about there, Jonah, is that when we ended the day yesterday, soybeans were up 11 or 11 and a half cents. Today, as we're doing this right now, soybeans are down 17. I think a lot of that is coming from, what's going on in the rest of the world. But I also think that the market is looking at some of this information a little bit differently today than it was yesterday. And I think there's a good reason for that, which we will get to in this presentation as we roll along. So, topics of conversation here today. Obviously, we're going to talk about the 2026 prospective plantings and the March 1st quarterly grain stocks report. Both of those have implications on where markets could be going into the future. We're also going to talk about, I'm going to kind of nitpick at the USDA's acreage numbers. And when I say USDA's acreage numbers, it's important to note that this is a survey of farmers of what they're intending to plant. And the USDA is just reporting that to us. They're not giving us, this isn't the USDA taking a guess on things. This is a survey of what farmers are intending to plant. But there's a think about the timing of that survey versus what's going on in the world right now that might change these numbers. And we're going to talk about that a little bit and could change the numbers for both corn and soybeans. And then beyond that, we'll talk about the corn and soybean export outlook. I think on the demand side of the equation, that's really the biggest thing that we've got going on or the biggest topic of conversation that we have for both corn and soybeans right now. And then ultimately, we're going to talk about some strategies and how to, manage your operation and really how to manage the risk that you have out there. So hopefully that'll cover a lot of bases for you guys here today. Yeah, let's get into it, right? So, nope. Okay. So, as far as the prospective plantings report is concerned, the initial feedback from it is, oh, look, that corn number came in higher than analyst expectations, and the soybean number came in lower than analyst expectations, as did wheat. Both soybeans and wheat came in lower than analyst expectations. Not only that, the corn number came in well above 1.3, almost 1.4 million acres above what the USDA had been suggesting on their statistical analysis when they gave us the Ag Outlook Forum numbers back in February. Soybeans only came in 300,000 acres less. The big loser was wheat, dropping basically 1.3 million acres. So a lot of times we talk about corn and soybean acres and the rotation and how if corn's gaining acres, soybeans are losing acres, and so on and so forth. Well, in this case, it really was more corn versus wheat, right? Because soybeans from that Ag Outlook Forum number really only lost 300,000 acres, whereas, wheat lost that 1.3, almost the exact number that corn gained. So really, wheat was the loser on the acreage battle. I guess is what we're going to say. Soybeans at 84.7, that's still quite a bit bigger of a soybean crop than what we planted last year at 81.215. And for corn, it's still a pretty solid reduction, although not as big as expected by either the USDA or the trade guesses. But it's still quite a big reduction from last year's planted acreage number, 98.788. Really that's what, 3.4 million acres less planted acreage in corn. Now, again, these are moving targets. This is what farmers reported to the USDA that they intended to plant. This can change by the time we get into planting and when we see our June planted acreage report. And then again, when we start looking at in August, September, and October, the USDA starts using FSA data or crop insurance data to give us an even more updated number on acreage. And last year, that was quite a debacle. We'll talk about that in a minute too. The other report that we saw yesterday was the quarterly grain stocks report. This is as of March 1st. And no big shock here, right? I mean, corn did come in below the average trade guess, but it was an extremely wide range of guesses. I mean, if you look at it, there's about an 800 million bushel wide range in guesses for the quarterly grain stocks report. That's utterly insane. Meaning, at least some of the analysts out there had really no idea where to place that quarterly grain stocks number. By the way, Zaner Ag Hedge, our number was in the upper 8 million acre upper 8 billion bushel range. So we weren't terribly far off. And while that corn acreage or corn stocks number did come in below the average trade guess, it did come in a little bit over our number. And what I'm going to say about that is this number that we saw, that March 1st quarterly grain stocks number for corn, in my book, doesn't give me any reason to go back and say that the demand that we've seen so far through the first couple quarters of this marketing year gives me no reason to go back and change the USDA's balance sheet. And I don't think gives the USDA any reason to adjust based on what we have seen. If they make any adjustments from here on out, it's about what they're predicting in the future. And when we talk about exports, I think there might be a compelling argument for them to increase that, maybe not right this moment or on the next report that we have coming next Thursday. That's their WASDE report. But if exports keep up like they have been, I think there might be a compelling reason for them. But the point is that in my mind, that quarterly grain stocks number came in line with where it needed to be to kind of justify the USDA's current demand estimates that they have for this marketing year. And I'm going to say the same thing about soybeans. While it did come in a little bit over the average trade guesses of the 2.067, all the math that I did had me at a 2.090, so only 15 million bushels difference. And at this time, halfway through the marketing year, I mean, that's a residual number. That soybean number doesn't give me any compelling reason to say that the USDA's estimates are wrong. Up until this point, it's all about what they see or what we think is going to happen going forward. So for now, these quarterly grain stocks numbers, and I'll say the same thing for wheat, which only came in 10 million bushels below the average trade guess. There was nothing shocking here, guys. Nothing. And nothing that really makes you feel like, oh, the USDA is going to have to make some significant adjustments on their current crop or what we're going to call old crop now, balance sheets because of this big surprise in quarterly grain stocks, but that did not happen. Again, these numbers are, in my opinion, in line with where they need to be for the USDA's current estimates. The one thing that I want to sort of talk about here for corn, when you get a quarterly grain stocks report, I dig into numbers. And when you dig into the numbers for corn, one thing I really like to look at is where these bushels are held. There's an on-farm number and there's an off-farm number. I think there's a very interesting thing happening there. Off-farm, meaning commercial held stocks of corn, are down 2% year over year. Yet we know that there's almost a billion bushels more corn being held. Where is that corn? Well, it's being held on farm. The on-farm corn stocks are up 21% year over year. Again, an extra about a billion bushels higher on farm at this time of year than there was this time last year. That, in my mind, is significant because that's more bushels that farmers are going to have to sell at some point And that's more hedge pressure or selling pressure that the market's going to have to absorb. My initial thought or feeling on that was, oh man, that extra billion bushels of corn held on farm, it could be a real strong headwind for any extended rally, at least in the near term. I didn't like that number when I first looked at it. But I'm also going to say that now that I've kind of sat with it for a moment or two or a day, it doesn't bother me as much as it originally did for two reasons. One, this was a March 1st quarterly grain stock survey, right? It is now April 1st. We've had a month since this happened. And the funds, the large speculators, have bought a lot of corn. They've gone from a slightly bearish position or short position to now being rather long in the corn market. And all of that buying didn't really give us a whole lot, or at least not as much of a rally on the corn market, or is not as much of a positive influence on price as what we would, I guess, normally expect when you see that much fund buying. And I think one of the reasons for that might be that we sold a lot of those bushels, or a lot of producers have sold a lot of bushels in the last month to kind of offset that fund buying. So there might not be that extra billion, or at least that full amount, sitting on farm that we're seeing on this quarterly grain stocks report. The other one too is with demand being so strong, right? When you have a record crop of 17 billion bushels, well, okay, the thing that we don't talk about as much, or we should be talking about more, in my opinion, is that we also have record demand. Well, record demand means we can chew through big numbers like that quicker. So for those two reasons, maybe that extra billion bushels, that 21% higher year over year on farm corn storage, maybe is not as big of a headwind as my initial gut feeling was on that when I read the number. I am still going to say it is a headwind, right? And so you do wonder if and when a rally were to come in the corn, or an extended rally were to come in the corn, we might have to chew through a good amount of those bushels before that happens. But again, I don't feel like it's quite as big of a problem as what my initial concerns were with that. So I did want to make that note. Now, where did the report come in versus expectations on planting? You say 1 million acres or so, that's a pretty big miss from guesses. Well, when we're dealing with these big numbers, if we look at, percentages, it's really not a big miss. It came in about 1% higher than what the trade expectations were. That's a pretty common thing. It's very similar to last year, and very much within the range of plus or minus of what we've seen in the last 10 years or so. In fact, the bigger misses that we saw in 2016 or 2022, it was nowhere near any of that. So that acreage number, while from a sheer volume number, okay, that sounds like a lot, but really isn't that much compared to what the expectations were. You can say something very similar about soybeans. The one thing I will say for soybeans is that it was a sort of we've been missing to the downside in the last few years. 22 being the exception, where that was a big, we missed and it came in well over expectations. But yeah, I mean, so again, here too, not a big shocker from the acreage standpoint for soybeans. Now, these quarterly grain stocks, again, we're looking at sort of marginal things. By the way, I remember that day, that March 1st quarterly grain stocks number in 2013, where it came in almost 400 million bushels higher than expectations. Funny thing about that, when we had record prices in 2012, because of, well, we all know why, the drought we don't want to talk about, we had these record prices. Well, the trade was really underestimating what that did to demand. Really cut demand down a lot more than expected back then in that first calendar quarter of 2013. I'm also going to say I think we saw some bushels sort of come out of the woodwork that were being underreported on farm. That also contributed to that. That's a theory of mine. I've had arguments with our chief market analyst, Karen Braun, many times about that one. I still hold that, saying I think high prices bring out some phantom bushels. Anywho, yesterday's quarterly grain stocks report for corn was not a big shock by any means, very much in line with expectations. Again, about 1% off. We're going to say something similar about soybeans, maybe a little bit bigger miss than what we've seen in the last couple of years for soybeans. And it was higher than expected. There, as I said earlier, when we were talking about the Zaner numbers, though, I mean, that number came out very close to what our estimate was. So, I mean, I could sit here and I could question the math of other analysts and say that that average trade guess probably wasn't as good as it should be. I don't know. But to me, okay, yeah, it was a bit of a miss. That is a little bit bearish. I think you are going to have some analysts saying that, oh, quarterly grain stocks came in 40 million bushels higher than what the trade guess was. That means that the USDA is going to add bushels on the next WASDE report, which is next Thursday, and say, oh, this is add 20 or 25 million bushels to the carryover. Yeah, I don't feel like the USDA is justified doing that based on the quarterly grain stocks number. Now, whether they are justified doing that based on what our export outlook looks like for the end of the rest of the marketing year, that's a different story. You might have a situation where some of these analysts that are saying, oh, that quarterly grain stocks number came in higher than expected, so therefore the USDA is going to have to add to their carryover number. Well, they might end up being right, but for the wrong reason. It's not because of the quarterly grain stocks number. If the USDA increases the carryover number, it's because they don't like what they're seeing for the export outlook going forward. We'll talk more about that a little bit later in the presentation. All right. So just this one, a lot of times in these presentations, I'll throw in like a meme or something just to kind of be lighthearted. This kind of does it for me. It's really, really odd and somewhat surreal. This is a deja vu of last year, right? The average trade guess for the planted acreage number or the planting intentions number for corn was almost identical. I mean, within 50,000 acres, the average trade guess was within 50,000 acres of or 55,000 acres of no 45,000 acres. Anywho, it was very, very close to what it was for this time last year, and the actual number came out very, very close to what it was this time last year. It was almost a cut, copy, paste of last year. Now, the significance of that is that that number changed a lot. It not only changed between planting intentions and the June planted acreage numbers, but oh my, did that corn acreage number change very, very significantly when we got to our final acreage number, or as those FSA numbers started rolling in. I am very, very concerned. I do not understand what happened with that last year. We've never seen anything like that. Um, there's still a lot of questions on how that exactly happened. I think the only way we can explain that for the moment is that these planted acreage surveys and the planting intentions and the planted acreage surveys are surveys. These are farmer responses. I don't know if we're getting accurate data. That's really what it is. This is not the USDA throwing numbers out there to spoof the market or whatever. They're directly reporting what we're telling them. And then when you see a final number come out so very different than what we've told them, well, it makes you wonder, how accurate is the information that we're telling them? I don't know. Are we going to see that again this year or not? I don't know. It worries me. That was a big, big problem for the corn market last year. Now, if we plug these new acreage numbers into the USDA's Ag Outlook Forum balance sheet, we've not seen a balance sheet for new crop on a WASDE report yet. In fact, that won't even happen next Thursday. That will happen on the May report, not the April report, but the May report. And when they do that, these are the numbers that they're going to be using for planted acreage, yield, and production. Okay. So that part of the equation, we know I have those there in red and blue ink because that's what it will be. Okay. So their new production number, given trendline yield of 183 and their planted acreage number of 95.338, is going to be 15.980 billion bushels. That is 225 million bushels more than what they were looking at on Ag Outlook Forum. It's also over a billion bushels less than the production that we had from last year. That is because of a lower yield number and because of a lower acreage number. So a more realistic crop is what will be shown on this next new crop balance sheet. But either way, it is a 225 million bushel increase from what we saw in Ag Outlook Forum. Now, when you increase production like that, I don't just automatically put that 225 million bushels onto ending stocks, because when you have increased production, the USDA is going to try to find ways to increase demand as well. I think there's two very obvious places for them to do this. The one very, very obvious place is going to be for exports. They have next year's exports dropping by 200 million bushels. While we are, at least with these numbers, projected to have a smaller crop, which therefore would track that we would have maybe a little bit smaller exports, I would say with the strength of exports that we're having this year, you could argue that our current export number will go up, and therefore there's a good argument for next year's export number to go up as well. That, in my mind, would be a very easy place for them to add to demand. You could also say that maybe feed and residual would catch some of that as well, because they're currently looking at 200 million bushel decline from this current year to next year. End of the day, though, they are going to be probably adding something to ending stocks. And in my mind, it'll probably be pretty close to a 2 billion bushel carryover, which, by the way, is not terribly unsimilar to the situation that we're looking at on our current crop balance sheet. So ultimately, given trendline yield, you don't have a big, dramatic change in store for next year. But that absolutely depends on the growing season we have and the yield we have. So we'll see. For soybeans, another very similar story. If I put the new production numbers in there, it's only a 14 million bushel decline from the number that they had on their Ag Outlook Forum number. Really, really marginal. Because keep in mind that planted acreage number yesterday came in well below the analyst expectations, but it was only 300,000 acres below what the Ag Outlook Forum numbers were. It makes very little changes on production from their end, makes very little changes on the balance sheet. Very likely you're going to be looking at another 350 million bushel carryover, the same as what we have for our current crop, and virtually the same as what the USDA showed us in Ag Outlook Forum. So the soybean outlook really didn't change at all based on these planted acreage or the planting intentions numbers. The other one that did change, though, kind of, is wheat. Losing almost 1.3 or 1.23 million acres in wheat certainly has an impact on production by about 50 million bushel. The thing about that, though, I don't know. I personally don't think the USDA should change a whole lot on the demand side of the balance sheet in wheat. But because of the timing of the marketing season, they probably will. They'll probably keep that ending stocks number somewhere at or above 900 million bushel carryover. Again, a very similar story. That's a big carryover, a big domestic carryover for wheat. I don't think there's really any reason to feel like, oh, this is now shockingly bullish for wheat, even though that is one of the lowest acreage numbers we've ever seen. Well, at least in modern history, right? I mean, we keep losing wheat acres, but yet we still have a pretty big domestic carryover. And without getting into the whole nitty gritty on that, it's just not a great outlook for wheat. So how might these acreage numbers change between now and when we get to June? Now, you can see for corn, minus 2019, and that was because of weather, and 2020 was because of COVID, right? Those were the last 2 years where we saw any sort of significant drop in corn acreage from what we said we were going to plant or intending to plant to what we said we did plant. Every other year, we've pretty much had either, the number's been pretty darn close, or in 21, 23, and 24, we ended up planting quite a bit more corn acres than what we said we were intending to. The function there is that, generally speaking, if you have decent weather for planting, we keep rolling on corn. We like to plant corn. And given the weather, given a good start, we end up with more acres in corn. That's just kind of how that works, or how that's worked in the past. So who knows what the weather outlook is? Well, I mean, you can look at a longer term weather outlook for our planting season. It looks like it might be a little bit wet in the east, maybe kind of a repeat of what we saw last year. But if we get rolling on corn, history shows that we tend to want to keep going on that, and we end up having a higher planted acreage number than what we saw on intentions. Now, could this year be the same, or is there something maybe compelling to change our minds on that? Well, first of all, for soybeans, really 22 and 23, we saw acreage drop in soybeans. Well, again, those are years where we kept rolling on corn with good weather. So it's the opposite function for soybeans. If we have really good weather, we tend to plant a little bit less for our planting season. It's just because we plant more corn, right? So those two obviously kind of function against each other. But okay, so here's the thing for corn. We have a situation with the war in Iran. It has sent fertilizer prices spiking, absolutely spiking. Okay. And that has called into question of, these last minute acreage decisions. Are we seeing some of those intentions maybe switching over from corn to soybeans? And I think that is a very legitimate conversation. As you can see from this chart, where we were at the beginning of February compared to where we are now, we are sharply higher. Now, that pink line, or kind of peachy line, that's 2022. There's been a lot of comparisons made to 2022. 2022 was when the war in Ukraine started. Another place, Russia and Ukraine, is another place where a lot of the world's fertilizer comes from. So you saw a very similar spike. Now, here's the thing with that. That was happening. That big spike initially occurred back in September, October, November, December of 2021. So the previous year, when we were making our initial acreage decisions. So that high priced fertilizer was already kind of baked into the decisions that were being made in the fall. Then you had sort of a lull in January and February. Early 2022, you had things kind of cool off from a FERT perspective. So I think that actually may have gained some corn acres. I think some guys booked some FERT in Jan and Feb of 2022. And I think we may have gained actually some acres compared to what our original thoughts were back in October and November. And then FERT prices spiked again after that. So, everything that's happened basically since the beginning of February sort of mirrors what's happening here in 2026. But it was a very, very different picture back in the fall of 21 compared to the fall of 25. So I really don't think that is a very solid analogy to look at 22 and to look at 26 and say, hey, these are the same. They're really only the same from February 1 to now. They're not the same back from last fall. So when we look at when this survey was taken, a lot of that survey happened really early on, beginning of March. And if I go back and look at, when these price spikes happen, well, here's where we're sitting in the first couple of days of March. I don't think that this spike had enough time to really influence the first half of this survey process. Over 50% of the responders happened before that big spike. I think would have had an effect on people's thoughts or decisions. So while some of that spike in fertilizer prices may be reflected in this planting intention survey, I think there's a big portion of it that isn't. Long story short, I think there is a possibility that the spike in fertilizer prices does in fact have an impact on how many acres of corn that we actually end up planting compared to what our intentions were. The other thing too is the corn soybean ratio. It's really, really trying and has been trying to favor soybeans for some reason. I don't really understand. I don't have a very good outlook on exports for soybeans. I'm not as optimistic, I guess, as a lot of people are on business with China. But the market seems to be. So, maybe this corn and soybean ratio has also pulled a couple acres from corn towards soybeans from when that survey for the planting intentions number was taken. Now, as we spoke about, though, can we really base or put a whole lot of stock in these planting intentions or planting survey, either the surveys, the intentions or the intentions or the planted acreage surveys that we have? Because last year, when we got into FSA crop insurance numbers, well, it turns out we planted almost 4% more corn than what the survey what Farmer Survey said we planted in the June number. How did that happen? I don't know. Can we really trust surveys anymore? I don't know. Are we going to end up planting another 98 million acres of corn? I don't know. Does fertilizer prices matter? Does the corn and soybean ratio matter? Does anything other than planting weather matter? I don't know. This is a big problem. The surveys are a big problem. That system, unless there was something that happened last year that they're not telling us about, and somebody got a number wrong somewhere, something like that, the survey systems might be broken, right? So if that's the case, it makes it really hard to put a whole lot of stock into these numbers at the moment. The best we can do is sort of take our best shot at that, right? Um, and what I'm going to say is that I think what everybody wants to know, I think about 1 million to 1.5 million acres of corn might shift back over to soybeans, which means that the intentions numbers or the average trade guesses for the intentions numbers might actually end up being right around where we do end up with that planted acreage number that we see in June. Again, anybody's guess what the final number might end up being. But as far as a shift based on fertilizer and that corn and soybean ratio, all the math that I'm doing suggests that it could be 1 million to 1.5 million acres. And by the way, if the war in Iran were to end today and fertilizer prices come crashing back down, I would say that number could be a little bit less, but not significantly. In my book, it's 1 million to 1.5 million acres that have been sort of lost on corn and moved towards soybeans. Oh, sorry. No, let's talk more about that. Yes. Okay. Now, a really, really bright spot. The corn export sales numbers has been en fuego, on fire. Really, I use that because of the March Madness, but it's been on fire. Really, really, really good. I mean, the best we've ever seen. And the fact is that we're doing it without China. The last record high corn export sales number that we've had at this time of year was 2021, where China had bought a very significant amount of corn from us to appease or to make good on a phase one trade deal, right? Or sort of buy corn leading into that deal too. So we're doing this without China, and that is extremely impressive. And the world has a lot of demand for U.S. corn, and that is really, really great. I'm also going to say, a 17 billion bushel crop, it's a huge number, but it's good for one thing, and that is good for creating business. And hopefully, it's creating business and relationships for years to come. There is actually a really, really great, wonderful silver lining that we're getting from having such a large crop from last year, and that is this. Okay. These are wonderful export sales. And now, what I'm also going to say is what happens if China does come in and buy? Let's say the meeting with President Xi, Chinese President Xi and President Trump does happen. Still unsure on that one. And China says, well, we've got all the beans that we can possibly handle coming from Brazil right now, but we could use some corn. Hey, wow, that would really, I think, surprise the market, and that could really light a fire under this and really change the current balance sheet that we have for corn, and therefore also change next year's balance sheet. So again, exports have been really fantastic for corn, and I think there is sort of this outside sort of sneaky chance that maybe China buys a pretty significant amount of corn leading up to or because of that meeting if it happens. So I don't know. I'm very, very happy about how the export sales have been going for corn, and I'm still very optimistic for corn exports going forward. And part of it is because of this. Look, this is sort of a seasonality chart of what our corn shipments are. Generally speaking, we kind of go through a lull in September, October, November, December, and into January. Then it really starts picking up in February, March, April, May, and June. That is because of two reasons. One, South America ships out a lot of corn in those fall and early fall, winter, and even in the early spring months. So we have a lot of global competition during that time, but we also have a lot of competition at the ports because we're usually sending out a lot of soybeans at that time. Well, that was not really the case this year. So we had our ports wide open to ship a whole lot of corn. That meant our corn was really competitive. And we sent out a lot of corn during our sort of atypical season. And then we are now getting into that typical export window that we have for corn. And so far, we are holding up at an elevated level as good or maybe even a little bit better than what we had during our atypical season. That is extremely encouraging. There's a year 89-90 on there, marketing year 89-90 on there, where we had that atypical season where we had a lot of export shipments during that season because of a drought in South America. But then it really slowed down during our typical export season. Well, so far that hasn't been the case. And if I'm the USDA, this is becoming a more and more compelling argument that I should be looking to add to the corn export demand that we have on a balance sheet. I don't know if it's screaming that they have to do that just yet. But as we keep going along, if this keeps happening, I think there will be that case made in the next month or two. And this is also a time frame where Brazil stops sort of shipping corn. Again, they're in the middle, or just actually really the beginning of their second season safrinha corn crop. They don't have a ton of corn to ship right now. They'll start picking that back up beginning in June, but really August, September, October, as we talked about, that late summer, fall time frame is when their time to shine is for exports. So we have our time. We have some time here. Okay, so the other thing about Brazil, and if you guys saw my presentation in Commodity Classic, this was my big takeaway from the trip that I had in Brazil earlier this year. And this is something that it really kind of opened my eyes, and I think is a wonderful tailwind for our export program for corn for years to come. They are using a lot more of the corn that they are producing in-house. They've increased their output by about 2 billion bushels, but also they're increasing their domestic demand. And since 2016, they've increased their domestic demand for ethanol, just ethanol. I mean, they've increased it for feed as well, but for just ethanol, they've increased it over 800 million bushels. That is awesome. And there are ethanol plants going up everywhere in Brazil. They use a lot of ethanol in Brazil. Traditionally, that had been sugarcane ethanol, but they're moving more towards a corn ethanol because they're like, hey, we got a lot of corn. All right, let's use more the American model of using corn for ethanol. They've also found uses for their DDGs. They're not exporting a ton of ethanol. They're using a ton of ethanol. They're also not exporting a ton of DDGs. They're incorporating that into their feed rations. So whatever the Brazilians are going to use, whatever more corn they're going to use domestically, that opens up the window for us to continue to sort of dominate the world export market. And I feel really good about that going forward. In the meantime, the funds have gotten rather long on corn. They went from being mildly short in January and February to now all of a sudden really rather long. As I said earlier, I think we've had some farmers selling in that same time frame to sort of offset the positive effect that this would normally have on prices. I'm also a little worried that they're getting a little too long, a little too quickly, and that we could see a bit of a correction. As I look over to my quote screen here today, I wonder if that's actually happening right now. But that's okay. I would like to see this fund position sort of flush back out. I'd like to see them stay long, but only at like 100 or 125,000 contracts, because then I think that really opens up the door to get past this time frame with farmers selling, get that sort of out of the way, or at least more of it. Get a bigger chunk out of the way, and then get into our growing season. Let's see a forecast that gets us a little bit concerned, and all of a sudden we have the funds buying and farmers not selling, and that's when we can see a legit rally. So I think this is it was kind of verging on a little bit of an unhealthy makeup to the market, meaning I don't know. I think we might see a bit of a correction in corn. Well, again, if I look over at my board right now, corn down 9 cents. I don't love that, but I think that might be occurring at the moment. Ultimately, though, I think that correction could be setting us up for better things to come if we get any sort of reason, whether it's from the second season Brazilian corn crop, a weather issue, better geopolitical news. We talked about the potential of, I think there's a potential China might buy U.S. corn, or any sort of issues that we could have with planting or our growing season. That sets us up for a better climate to have a bit of a more sustained rally in. Now, talking about soybeans, this is my transition into soybeans, by the way. The funds really haven't been short soybeans since last October. And by the way, what happened then? Well, that's when we had that meeting between Trump and Xi, or the meeting was announced between Trump and Xi that happened at the end of October at the Apex Summit in South Korea. And, we got this trade agreement that was never signed, at least that I saw. But China agreed to buy 12 million metric tons of soybeans for this marketing year, which they've done, and then 25 million metric tons for the next 3 marketing years. Okay, those aren't great numbers, but it was better than what was happening at the time, which was zero, right? So we saw the funds really pile into the market on that. And then what happened? Well, China started buying, you know, middle of October into December, and the funds started selling. That's what we call buy the rumor, sell the fact. Oh no, didn't like that. But then what happened at the beginning of February? Well, President Trump said that China was considering buying an additional 8 million metric tons of soybeans. And that got the funds excited again. They came piling back in. It's almost identical to what happened back in October. It's kind of wild how that, happened almost exactly the same way. Now, here's the thing. We haven't seen any evidence that China is actually considering buying or is buying that additional 8 million metric tons. The hope was that would get agreed upon at that meeting, but that meeting's now gotten pushed back. And as it gets pushed back, it's deeper into the window of Brazil really exporting a whole bunch of beans to China. I think the likelihood of China buying that extra 8 million metric tons is diminishing very quickly. I honestly don't think it's going to happen. So at some point, I worry that the funds are going to be disappointed by this whole thing. However, in the meantime, we've had an RVO announcement that is actually fairly friendly, maybe not super friendly for the immediate future, but longer term. Maybe that's enough to keep the funds hanging around in their long positions for the time being. But here too, I do wonder if you're going to get some sort of activity like we saw in December and January of last year, where the funds just kind of give up on their bullish bets based on an optimism of more trade with China. So keep that in mind. And can't talk about China or whatever without talking about exports. And man, this is not the fun chart that we have for corn, right? I mean, this is the worst export number that we've seen since 1920, Trade War One, and it's only a little bit better. And that is with China buying a pretty significant amount, that 12 million metric tons. If they don't buy any more, and we don't get a significant amount of buying coming from the rest of the world, which, by the way, I'm not sure we do because we are currently priced well over the Brazilian prices because of that optimism for that additional business with China. We are going to struggle to hit the USDA's export target. If China were to buy that 8 million metric tons, which is 300 million bushel, that could have a significant impact on our balance sheet. That could be really bullish. That's why the funds have bought in front of that. The problem is that we're losing other business to the rest of the world. So whatever business that we might have gotten between now and the end of the marketing year might be offset because of the rally that we've had or the premium that we're trading at to Brazilian beans. And as I said, every day that goes by where China is not starting to buy that 8 million metric tons, I think the outlook for us hitting the current USDA's target or doing better than the current USDA's target, it just gets a little bit less likely and less optimistic. Another thing that concerns me, and this is bigger, broader picture, Brazil keeps producing more and more beans, and we're trying to fight back and regain market share of their global dominance now of the soybean export. They're being the world's largest soybean exporters, specifically to China. And it's a really hard thing to gain market share back when you're in a trade war with China, unless it's politically driven. Maybe we can get that done. I don't know. But the fact of the matter is that the Chinese economy is, for lack of better terms, sucking wind. It is not what it was back in 2015, 16, 17, 18, when we were seeing very sizable jumps in their soybean demand based on growth in their economy, based on their citizens, spending lots of money, and specifically on higher priced proteins. They like pork that's being fed a very high amount of soybean meal because they like their pork marbled like we like our steaks. That really it gets more difficult. It's a harder proposition as this GDP starts to shrink. Now it's not shrunk to concerning levels just yet, but it really suggests that maybe their growth in soybean demand is going to start slowing over time, and that makes it tough in a climate where you've got Brazil continuing to produce more and more. At some point, Brazil might get to the point where they find that they are overproducing soybeans and they don't have the market for their exports. And then where does that leave us? Well, we really, really need to develop our domestic crush capacity. The RVO is a step in that right direction. Hopefully that it all really comes to fruition, and we do add a very significant amount of domestic soybean demand to our balance sheet, because we're going to have to offset the competition on exports that we're getting from Brazil, on top of, the outlook in China from their GDP rate is really slowing down. Now, I know we're running really long here, so I will kind of do this fairly quickly. And by the way, guys, my number's all over. You'll see it in a second. But on the weekly email that gets sent out, my direct number is in there. If you guys got any questions on marketing, that's what I'm here for, to help you guys with marketing. Feel free to give me a call. We can have a one-on-one discussion to talk about some marketing strategies that can be directly tailored to your operation. But just in a general sort of broad perspective, I think now's a great time for downside protection. We saw that the funds have been aggressive buyers of both corn and soybeans, and sort of getting up to higher levels that they might not continue to add to that. I don't know if I see anything shockingly bullish in the market right now. I think it's a good time to be looking at some downside protections. Now, whether you want to do that with cash sales or HTAs, that is perfectly fine with me. Or we can use futures to do that, or we can use put options. There's a lot of different ways to do that. And a lot of that kind of depends on the individual's risk tolerances, preferences. And like I said, this is why we have one-on-one conversations, in order to sort of tailor it to your operation. But something else I like right now is sort of some sort of reownership strategy. Now, that can be, you sold some cash, and at some point I want to buy some calls going into the heart of our growing season, because like I said, for corn in particular, I think there's a lot of reasons to be optimistic. So I would like to look at that. But then there's also a synthetic put, where you sell cash and then you buy a call against it. That reopens upside potential. If we do rally into the summer, you can use that. You can use a call option. So you sell cash and you buy a call. The call option will regain some of that upside potential for you, right? But you have that cash sale to manage your downside risk. So there's a lot of different things that we can do here. In my mind, and especially for corn, I do want to be looking at re-owning that upside potential going into the growing season. I don't know if I'm feeling quite the same way about soybeans, but anyways, these are discussions that you should have with your marketing professional. And again, my number is out there for you guys. Feel free to give me a call. Speaking of which, I have a Ag Hedge hotline, which I do every after the close, right around 2:30 Central Time every day. It's 5 to 7 minute recording, and you call in, you listen to my thoughts there for the day, and you can do it at your leisure. So that is there for you guys. Feel free; it's free. Feel free to sign up. Also, all of the charts that you guys have been seeing is done by our chief market analyst, Karen. This is her newsletter. It's really, really fantastic. You can sign up for a 30-day free trial. I highly, highly encourage you guys to do that. It is really the best in the industry. It's really, really, really good stuff. All right. And that brings me to the conclusion. This is the profit planning series. This is the email that gets sent out every week, sometimes on Tuesdays, sometimes on Wednesdays. It's on Wednesdays if there's a reason, like this week, where we have a report on Tuesday, and I want to get you guys the most updated information. So then it comes on Wednesday. Otherwise, most weeks it's usually on Tuesday. But it's another way to see what I'm thinking on markets. I do Ted's 3 keys. So my 3 key marketing points or market points for the week. It's usually 500 to 700 words, so a pretty easy read. Again, some pretty awesome charts in there as well. And that's free for you guys, so feel free to sign up for that too. That should be bringing back Jonah. And that is the end of my presentation, guys. Hope you enjoyed it. Hope it was informational for you. And again, if you have any questions, do feel free to reach out to me. My number or my phone line is pretty much always open. Sometimes if you want to have longer conversations, it's better to do after the close. I can get kind of busy during market hours, but otherwise, for anybody associated with the channel, my phone line is always open.
Awesome. Thanks, Ted. And like I mentioned at the beginning of the call here, if you have any questions for Ted, feel free to put them in the comments here. But Ted, thank you so much. We appreciate you breaking down the important information and what it means heading into planting season. Don't forget, you can get more of Ted's market insights every Tuesday in our profit planning newsletter. Scan the QR code here on the screen or visit. We have a link in the chat to sign up. You won't want to miss those updates. And with that, thanks so much for everyone tuning in today. We hope you learned something from the discussion. We'll see you next time for more great insights to help grow your farm's profitability for the years to come.